Welcome to the Registered Investment Advisor Podcast, where financial services marketing expert Seth Green interviews experts, executives, and top producers to share can't-miss tips on how they successfully manage their financial service firms, grow their businesses, create great relationships, and influence the industry. And now, here's your host, Seth Green.
Good afternoon, everyone. Today, I have the ultimate pleasure of interviewing my high school alumni, Ken Kencel, who's CEO and founder of Churchill Investments or Churchill Group?
Churchill Asset Management, and Kencel is how we pronounce, but Ken Kencel.
Really?
Yeah.
For 46 years, I've said Kencel. My apologies. Ken Kencel, and I'm really excited about this interview. I'm Karl McKinnie, co-hosting with Seth Green and Kevin Harrington, the RIA Sharkpreneur podcast. Ken, let's get it right out there. What is Churchill, and who does it serve, and what makes Churchill unique?
Well, let me just say up front, Karl, I'm thrilled to do this with you. You and I, were classmates in high school, and we were chatting earlier about our common ground in different backgrounds. And I love doing these podcasts, and I particularly love doing them with a former classmate of mine, and obviously a Buffalo native, and as I'm sure, although we didn't talk about this one, a big Buffalo Bills fan. So
go Bills.
Go Bills, so we'll see how it goes in the snow against Pittsburgh on Sunday. So
Ken, real quick about the Bills. I'm such a Bills fan that when MetLife Stadium first opened the first year, I was still living in New York. A New York Jets fan got me banned from the stadium for 5 years.
Oh, God.
I'll tell you about that after the podcast.
Oh my gosh. Well,
but
look, it's a thrill to do this, and I get back to Buffalo regularly. I still serve on the board and the chair of the investment committee at Canisius. So I'm a big Bills fan and a big Buffalo booster as well. And so it's a great pleasure to tell you about my journey and hopefully inspire others that maybe in early days in their journey, and talk a bit about what influenced me and who we are today. So I'm founder, president, and CEO of a firm called Churchill Asset Management. We are an exclusive private capital investment management firm. We are part of the Nuveen asset management business. Nuveen is a $1.1 trillion asset management platform that is owned by TIAA. TIAA is the very large retirement plan serving lots of college and university professors, healthcare workers across the United States, over 5 million members. And so we're part of their asset management business, and we sit within Nuveen. We manage all of their investments in private credit and private equity. So we are a private markets manager. Today, Churchill manages over 50 billion of committed capital. We provide financing, both senior financing, often, historically financing that would have been done by banks and traditional senior lending. We provide junior capital. We invest equity in many of those companies. And we are our investment platform is very unique in the sense that we focus exclusively on financing private equity owned companies. So our client base, if you will, is as a private equity a financing source for private equity owned companies. And importantly, a part of our business is also investing in those private equity firms. So we're a very large limited partner and advisory board member for over 300 U.S. middle market private equity firms. And those firms obviously acquire companies, grow businesses in a broad range of industries, healthcare, software, business services. And so we back those private equity firms by providing financing and investing with them, both as a fund investor, but also as a direct investor in their transactions. And, it's an interesting story. I founded the firm in 2006, and in 2015, we became affiliated with TIAA, and we built the firm essentially from scratch. And so, to go from, we had a first allocation of capital from TIAA was $300 million, which we were so grateful for. And today, now we manage over $25 billion for TIAA and over $50 billion for our broader investor base. We have over 350 institutional investors globally, some of the largest pension funds, sovereign wealth funds, insurance companies, and we manage capital for over 2,000 family offices and high net worth investors as well. So it's been quite a journey. We're large. In fact, we are the most active private credit manager in the United States today. We've led the league tables now for the last several years in terms of number of deals. We invest for TIAA, but we also invest for institutional investors side by side with the TIAA general account. As I mentioned, we're totally focused on private equity firms, and we've been doing it a long time, and certainly very proud of the firm we've built. So that's what we do.
That's pretty great. That's outstanding. Describe for my audience your role and responsibilities as president and CEO, and let's put founder in there as well.
Yeah. Well, I would say that it's evolved, right? When I first launched the firm, I was chief cook, bottle washer, and pretty much everything else.
Right.
But it's evolved over time. Today, I chair the firm's executive committee. I sit on the investment committee, so I actually am involved in improving investments even still today. I spend a lot of my time fundraising and overall management and strategic direction for the firm. But I would tell you the most important thing I do, and really the most important thing that I have done through my what is now 18-year history since I founded the firm, is really all about being the cultural leader and tone setter for the organization. And that really means focusing on attracting, retaining, and mentoring the best people. But this business, and I would argue like any other business, is really at the end of the day all about the people. You look at our industry, and there's lots of banks that have a lot of capital, and insurance companies and other asset managers. But when you really look back at our success over the last nearly 20 years, it has really come down to setting the tone culturally, creating an atmosphere and environment where the most talented people want to be part of the organization you built. They feel that it is a diverse and inclusive environment, so people want to be part of it. They feel like their voices matter, and they feel like it's a place that, in many respects, I feel like our firm, although it's a lot bigger today, it's still like an extended family, where people want to feel connected, and they want to feel like they're in an organization that cares about them and their careers. And we've been very fortunate in that if you look at our success, I would attribute a large portion of it to the people and the culture that we've built.
That sounds great. Now you mentioned, you're a lot bigger. Churchill has nearly 170 employees, and you've been named one of the best places to work in money management for 3 consecutive years. Congratulations on that.
Thank you.
How would you describe your leadership style and how you've built this best-in-class culture?
That's a great question. So I would describe my style truly, and I've used this term before, and I'm a big believer in it, as really a servant leader. I think the best leaders of organizations really focus on empowering their people and ensuring that they're in a position to succeed. I like to say that one of my jobs is to fix stuff, meaning no problem is too small, because the more I can take barriers away from my people and create an environment where they feel like, if something's holding them back from being successful, that I can roll up my sleeves and figure out how to fix it. And if I can't fix it as a founder and CEO, then there's something wrong, right? Certainly the day-to-day environment. So I spend a lot of time focusing on setting the tone of the organization. I often walk the floors. stopping by people's desks, talking to people about, how they're doing, what ways that I can help them be more successful. We emphasize at our firm, a number of key values. Most importantly, we are a very collaborative organization in terms of how we work. We're very relationship driven, meaning very focused on our clients and supporting our clients. I mentioned earlier the inclusivity of our firm. We're extraordinarily diverse. Over 50% of our firm are women and minorities. So we're big believers in diversity in the workplace. And by the way, not as window dressing, because I actually think that that's a negative in terms of the firm. People need to feel that everyone is there because they're really good and really contributing. And when you create that dynamic, it's really powerful. So we operate with a very inclusive and diverse environment, but a real one, and one that emphasizes integrity. We understand that there'll be bad news from time to time, but we want to hear it. It's okay. People make mistakes, but we want to make sure that we're working to correct them and fix them and learn from them, and committed to excellence. And so, I would say collaborative, relationship driven, and inclusive environment, a focus on integrity and commitment to excellence. And I would underscore that, I certainly heard this, before, and other companies have focused on this, but I think it's really important how you treat your people. If you treat your people well, if you treat them with respect, and you have passion and empowerment of your organization, the people within your organization, it's amazing how that translates to the clients, right? Sure. If they're confident and they like what they're doing, the odds are pretty good that the clients will sense that almost immediately. I like to say that there's a woman, Ileana, who is our receptionist at our offices in New York City, and we're in the Seagram building with these very nice, beautiful offices, and clients come in. And I tell Ileana all the time, pretty much every morning when I see her, and she's fantastic, and she's super positive and upbeat, and and when people come in the door and I say to her, "You're the first person that everyone who walks in our door meets, and so you're incredibly critical for our perspective, the perspective of us from our client, from a client standpoint and an investor standpoint. So everyone in the organization matters, top to bottom. And so my job is, as a servant leader, to really empower our people and ensure that they're in a position to succeed."
That's tremendous. That's tremendous. Now, you began your career at Drexel Burnham Lambert. You spent time at Chase, RBC, Indo Suez. Now, tell me about some pivotal moments, or tell my audience about some pivotal moments that shaped your career, and tell us about your journey and how it influenced that servant leader mentality and how you built Churchill.
Sure. Well, it is interesting. You go back, and you and I were talking about this earlier. It's been 40 plus years since we graduated from Canisius, and you think back in your career, and and I look back at certain milestones, pivotal moments in my career, and I can think of several that had a major influence on me and my development, and ultimately our success and my success from a career standpoint. And probably, one of the most important, you'd probably agree with me on this one, was meeting my wife. I've been married. I met my wife my junior year in college. We've been together now since 1980. So it's been, 44 years this summer. Right. And she's an incredible person. Robin's amazing. And she's a professional. She's in real estate and has been in marketing and professionally, but probably the most interesting thing is she's a competitive world-class ballroom dancer. She's been U.S. ballroom dancer champion for 6 years in a row. And so, I think, when you look back, and I'm sure that, as people in our audience have seen this, when you look back at your colleagues and classmates in college and in high school, oftentimes it's who they married and how that person influenced their journey, hopefully in a positive way. And Robin has been a a great life partner of mine, and here we are. So that was the first good decision I made. Was I married well, so she's a great person,
Okay.
great influence. But I would say that a couple things along the way. So the first I would say is that, even though I went to law school, so I went to Georgetown for college, and then went to law school at Northwestern, and I went there because I thought, gee, you've got this business degree, and wouldn't it be great to diversify? And I'd like to be a better writer and think logically. And so I got an offer. I got a full scholarship to Northwestern, and I thought, well, gee, this will be a great way to diversify. So I went to law school, and law school I loved. Actually, I thought the education was great. But when I got out and practiced law for a few years, it became pretty clear to me that I wasn't really loving practicing law. I was a corporate lawyer. And so the first pivotal moment was realizing that, while law school was great, and practicing law, paid pretty well, it really wasn't, what inspired my passion. And so pretty quickly decided that I really wanted to be on the business side, and particularly on the investment banking side, where I felt the most creativity, drive, upward mobility, opportunity existed. And so I made the switch to move from law to investment banking. One of my best friends in college was working at a firm called Drexel Burnham. It was known back in the 80s as the place to be. It was either Drexel or Goldman. It was super entrepreneurial, and that gave me exposure to an incredibly talented group of people, many of whom are in my business today, running firms like, Apollo and Ares and others, and even within the private credit area, lots of my colleagues and contemporaries have moved on to roles in the private equity and private credit world. So being part of a very fast-moving entrepreneurial environment had a big influence on me. I saw, organizations that pushed responsibility down to the younger levels and gave people opportunity to really shine, was a key differentiator. So I vowed that whatever company I headed, we would, our junior people would not have 6 layers above them and trying to navigate, 5 people, ahead of them in line. So we tend to be very leanly staffed, and I learned a lot from that and the culture that Drexel empowered. And so I'm still a regular attendee at the Milken conference. I sit on the Milken DEI council, and I see Mike, at least 2 or 3 times a year. And I think that the alumni and that experience really influenced me. The second really turning point was when, having been in investment banking for a long time, I was given the opportunity to join a more entrepreneurial firm, one that was really backed by a large bank, but was set up as a standalone business that pretty much looks exactly like our firm today. And it was really the template for what I ultimately built and launched in my own firm. And that was a very entrepreneurial firm called Indo-Suez Capital, which I co-headed for many years, that does pretty much exactly what we do, but it was backed back then by a large bank that set it up as a standalone business, and many very talented and capable people worked with me at that firm that now run some of the largest private credit and private equity managers in the United States, including some of those firms I just mentioned. So, so I went from one very entrepreneurial investment bank to actually launching my own firm in partnership with the largest bank in France. We did that for almost a decade. And then in 2006, made the decision to spin out. And I could see that the banks, the commercial banks, were moving more into investment banking and away from the business of actually lending money, right? So they said, gee, why do we want to be one of these boring commercial banks, this boring private credit lending? We want to be, like Goldman Sachs, and Goldman Sachs wants to be a bank, and JP Morgan wants to be an investment bank. And so that transition from bank to investment bank really spurred me to launch my own firm, Churchill, in 2006. And the goal from day one was to build a world-class private credit investment firm, and one that really was in the forefront of replacing those banks. Of course, things have accelerated today, so that 90% of our business is really done by firms like ourselves, asset managers, as opposed to commercial lenders. So it's been that was certainly a pivotal point. Along the way, when I was at Indosuez and in my own firm, I got to know David Rubenstein very well. I actually was an associate at his law firm when I was practicing law. We financed many of the early Carlyle deals as he grew his firm. And in 2011, we sold the firm to Carlyle, and I joined Carlyle and spent about 3 years there. And, I would say from my perspective, it was a terrific experience. We raised a lot of capital. I learned a lot about a large-scale alternative asset management firm, but I really missed running my own firm. And once the entrepreneurial bug has kind of bit you, it's hard to go back, because when I was running my firm, I could pretty much control everything at the end of the day. So like I said, if there were a problem, I could fix it. If there was culture, I could help influence. And so with their blessing and their support, I decided in 2015 to spin back out and to relaunch my firm with all of my original partners. And I did that in 2015, and I was fortunate enough to find TIAA, which is one of the largest investors in private credit in the world, and was introduced to a guy named Roger Ferguson, who was running TIAA at the time, and a gentleman named Rob Leary, both of whom remain very good friends of mine today, and a person named Jose Minaya, who's actually today the CEO of Nuveen, and ultimately sits on our board and is my boss. So Jose has been a great supporter of our business, and so we started from scratch in 2015. Again, we spun out. So we found a great partner, and we went from zero to $50 billion today, and it's been a great journey.
That's tremendous. And in that journey from zero to 50 billion, tell my audience about some key accomplishments or milestones, and what are you most proud of?
Yeah.
And that's a tough question, because you have so much to be proud of.
I would tell you, it's quite interesting. People ask me all the time, it's quite extraordinary to grow a business like this in a very competitive world, like private equity and private credit. Lots of big players, and to have built the firm from scratch in 2015. Obviously, we had all worked together, so all the partners knew each other, but we went from basically a restart of my firm that I founded in 2006, fortunately with most of the original partners. But how do you go from that to $50 billion and in an environment where, most of the big players have had a, 10 or even 20-year head start on us? So, and here we are today, we are the most active private credit lender in the United States for 2022 and 23. So how do you do that? So I like to say that, and I believe very firmly that probably the biggest single thing was we got the hiring really, really well. Obviously we had the founders. There were 6 of us, but beyond those 6 people, the first 20, 25 people we hired, who by the way are all still with the firm, were the and many of them are on the exec or on the operating committee of our firm today. That's where we got it really right? Because then it went from 6 people to 25 or 30 people, and they could be cultural warriors, if you will, who really understood what we were trying to do and what we were trying to build. And so one milestone was really being successful in hiring a really talented and really in many respects selfless group of people who are now the leaders of the firm. We just announced a couple of weeks ago that we expanded the operating committee of the firm. We added 6 new members, by the way, 5 of whom are women, which I'm very proud of. I joke with all of us that eventually they're going to just take over. So we have a lot of very talented women in the organization, and I'm very proud of that. And many of them were on board with us early days. So it was that early, very good hiring. And then secondly, the challenge of COVID. So when we hit COVID, we were up and running, we were launched. And so there wasn't a risk of us going away. We had about 50 professionals and we were managing at that time $6 billion, which, to us was a lot of money. And we had a good number of institutional investors. But what it turned out actually is that our performance through COVID, we're very conservative, and we have very strong private equity firms that we work with. And so during COVID, we went from 50 professionals to coming out of COVID, we were over 150 professionals out of COVID. So we hired over 100 people, roughly 100 people remotely. And we went from 6 billion to over 40 billion coming out of COVID. So we were 5-6 times as big. So we raised $30+ billion in COVID. We hired 100 people during COVID. And so I would say the other, real milestone was, growing in a remote dynamic. And that took a lot of work, staying connected, trying to do regular, offsites, regular events, virtual happy hours. And we lost almost no one through COVID. So it turned out that the scariest event for us and for most companies is, oh my God, we got this new baby that we launched in 2015, and we had done quite well, and then 2020 happened, and we were 4 years into our growth, and suddenly everything went remote. And how do you manage remotely, and how do you grow remotely, and what happens to your portfolio? How are the companies performing? And we ultimately didn't have a single loss or a single default in COVID. And I think that translated into investors saying, gee, these guys are doing some things really right. And so that accelerated our growth. It resulted in an incredibly loyal employee and workplace. And you mentioned we were rated as one of the best places to work in money management for 3 years. And obviously, it grew dramatically during COVID. So that was, that COVID was really a real milestone for us in terms of our growth, and very, very proud of that. And as I said earlier, the thing I'm most proud of is our people and our culture. And that's really what it's all about.
It's tremendous. I'm loving this. This is very, very good stuff. Very impressed. Proud to have known you all these years. So let's talk about those years. How did attending Canisius High School, which I will say is the best educational value this side of the Mississippi River for young men, how did attending Canisius High School affect your career and success? And who was your favorite teacher?
Great question. So that, in order to really understand that, as you and I were talking about, you kind of have to go back to, my early days. I was born in a little village, a little place called Woodlawn, New York. Woodlawn, which is outside of Buffalo. It was effectively a very small little town that most people in Woodlawn kind of worked for the Bethlehem Steel, or one of the other businesses along the south shore of Buffalo and along Lake Erie. And I was maybe less fortunate early on. Both my dad died when I was 2. My mom passed away when I was a freshman at Canisius. And I was raised by my uncle, who was a bachelor and never married. Actually, he was 60 years old when he became my guardian. And he was a phenomenal person and never graduated from high school. But the one thing he said to me is, you got to go get the best possible education. And I want you to go to Canisius, where I know you're going to get a great education and you're going to get a great grounding morally, not just as an education, but also, they're going to teach you how to be a good person and what's important in life. And so I went to Canisius, and, my freshman year, my mom passed away. And when I was a freshman there was a Jesuit who ran, and Karl, you know him as well. He was kind of a legend at Canisius, and he was an interesting man, P.S. Nauman. He cut across the athletic side. He was involved with the crew team, and yet he was head of all the drama guild and all the plays and the productions that were a big deal when we were there. And he made a real effort to get the athletes in to the drama guild, right? So there were a lot of our classmates, as you remember, that were, phenomenal athletes. And then PS would kind of identify them and say, you can broaden yourself out a little bit. Why don't you try Shakespeare, and some of those guys would resist, but he just kept pounding away, and he got most of them to be involved. So in my case, I was on the football team with you. I was nowhere near what you were. I was just I was a scared kid, riding the bench, and you were a star. But and I played hockey too. I was a little bit better there. But at the end of the day, PS said, "Gee, why don't you try out for one of the plays?" And lo and behold, as a freshman, my freshman year, I actually was awarded the lead in a play with two seniors. So I was scared out of my what. But it worked out really well. And PS was an incredible supporter and mentor, and he cast me, took a chance on me. My mom passed away, during my freshman year, and PS did the funeral for her. And from that point on, he became an incredibly close friend and a mentor and somebody that I really looked up to. And in fact, right around the time that he passed away a couple of years ago, we were able to acquire a building across the street from Canisius and built out the Canisius, the Arts Center there. And and he was actually still alive at the time we did this. We dedicated the music area to PS, and ultimately now in his memory, he's since passed away in his 90s. And he had such an influence on me, and Canisius did as well. And I think I wouldn't have gone to Georgetown if it weren't for Canisius, and I wouldn't have, I wouldn't be the man I am today without the education I got there. And so I was asked about 12 years ago now, to join the board, and I've been fortunate enough to be a part of the leadership of the school for over a decade now, and I chair the investment committee there, and I've been able to really steer the endowment in a very positive way, and very proud of that. Certainly, we put the school on incredibly strong financial footing. We acquired the building for the Arts Center. We built out the Global Learning Center, the Madden Center. Obviously, during early days, we also were involved in expanding and growing the athletic fields in West Seneca. So I feel like we've grown a lot, and I think really set Canisius on a great path going forward. So it's had a huge influence in my life and in my career, and lots of Jesuits, but PS among them has been one that stands out. And I would certainly also mention Dave Ciancimino, the current president, who has been affiliated in different roles with Canisius now for over 20 years. And Dave's just a real gem, and he's been a phenomenal person to work with.
Yeah, and there were so many, and when people ask me that question, I struggle to give them one. It's just
right. I know.
So I usually say, okay, here's the favorite Jesuit, and here was my favorite lay teacher. Who was your favorite lay teacher?
Oh my gosh, I had a few actually. So one of them was a lay teacher, but also was very involved in the drama guild. She was my French teacher, Mary Johnson.
Absolutely.
Yeah, we all remember Mary. She was just a very full of life and fun person to be around. And she was my French teacher for a few years. I never really was very good in French, so but I still enjoyed it. And she was involved in the drama guild, so I would put Mary on the list. And of course, who could forget our wonderful JV football and hockey coach Jeff Gemmer, who
talk to him weekly.
Yeah, who's still bouncing around. So I remember Jeff quite well, and he was my hockey coach as well.
Absolutely.
And then Russ White, and you and I had chemistry together, so we
That's
remember
right.
Russ. Yeah. Tex McPherson,
Here you go.
Another legend.
Oh God, the list goes on, right?
Yeah, but it's some of these folks have passed on, but we'll never forget them. They were very influential, for us, and
Indeed.
certainly the Jesuits as well.
Absolutely. And you know what? My audience is probably going like, okay, enough about this school. So listen, private credit has grown to 1.6 trillion with a T. And there's some anticipation that the asset class will grow to about 2.8 by 2028.
Yes.
What has been driving this tremendous growth? And I understand that you were there in the beginning.
Yeah. No, it's funny. I was just given an honor that I actually was very grateful and pleased to receive as one of the 20 or so change makers in private credit, and going back to the early days, and I've been involved as a private credit asset manager really going back to the mid 90s. So it's been 30 years now. I would say that if you look back at how the banking industry has evolved and how the capital markets have evolved, you could see the seeds early in the late 90s when Glass-Steagall was the barriers of lenders being investment banks was removed, and so the elimination of the Glass-Steagall requirements allowed commercial banks to be investment banks. And what happened really at the end of the day is that all of those banks started to look at higher margin businesses like investment banking, right? Where you don't have to make the loan, you just underwrite it and then you sell it. And so the banks went from being in the storage business by making a loan and holding it on their balance sheet to increasingly being in the moving business where they make a loan and they sell the loan. And so the return for the banks, the return on equity was obviously much higher, where you could sell the loan, not actually hold the loan, make a lot of fee income, investment banking fees, advisory fees. And so the returns were much higher. And so what you saw is that all of the largest commercial banks saw investment banking as a high margin, high return business. And at the same time, what we saw was a consolidation of the largest banks. So JP Morgan bought Chemical Bank, bought Manufacturers Hanover, bought Chase, Wells Fargo, acquired First Union and other banks. Bank of America bought Fleet and Bank of Boston, and JP Morgan bought First Chicago. And so all of these large regional banks that all had regular way private credit, direct lending, if you want to call it that, became consolidated into a handful of 5 or 6 banks. Today really being JP Morgan, Wells Fargo, Bank of America, Citibank, and they continued that progression from being commercial lenders to being investment banks and being more in the asset management business and the investment banking business. And so along the way, initially it was the GE Capitals of the world that did this business, but increasingly it became a business dominated by asset managers who raised institutional capital and increasingly individual capital to invest in private companies, both private equity and private credit. And today, our business is really dominated by a dozen or so large-scale private credit managers, of which Churchill is one. And we're back and we invest on behalf of institutions all over the world. We have today over 2,000 individual investors, over 600 institutional investors, some of the largest pension funds, in addition to TIAA, pension funds, endowments, insurance companies, all of whom see private credit as a very attractive risk-adjusted return. We originate the loans just like the banks used to. We hold them all in our investment funds. So we're a buy and hold lender. We're looking for fundamental credit quality. We focus on high quality, market leading businesses in areas like healthcare, software, business services, growing mid-sized companies. Our typical companies have anywhere from 10 to 100 million a year in cash flow and 100 to 500 million in revenues. and there's good value in financing and lending to those businesses. And again, these are the same companies that 20 years ago the banks were lending to, and we've essentially replaced the banks. And that was accelerated, I think, in many respects during the GFC. That really, the regulation and the increased burdens on the banks made it less attractive. And so banks moved even further away. And starting in about 2010, 2012, 2014, you really saw the acceleration. And so I would characterize the last 10 to 15 years, certainly directly, as really the institutionalization of private credit.
Okay.
If you went back 20 years ago, no big institutions were really allocating to private credit. Now everybody is, right? You meet an institution, you meet a big insurance company or a pension fund, and they're all saying, okay, we got 10% to private credit, 20% to private credit. We like the current income, right? And underpinning that is a hunt for current income, right? Institutions trying to meet the retirement needs, just like TIA. Mm-hmm. But what's interesting, Karl, about the next 10 plus 20 years, and I was quoted on both CNBC and Bloomberg actually last week, is saying this. I think the next 10 to 20 years are going to be about the democratization of private credit. Now that private credit has been validated as an asset class, big institutions adopting allocations, individual investors are saying, hey, this is a good place to be. We like the risk-adjusted returns. How do we invest? And so the future, I believe, will be about designing products and vehicles that can offer those private credit investments to individual investors. Okay. Both family offices and individuals, and obviously RIAs are a key delivery point for private credit. In fact, if you look at the old 60-40 model, a lot of discussion about maybe it's 60-20-20, and that 20 is more alternative investments. Mm-hmm. It's real estate, it's private credit, it's private equity. People look at their portfolio and say, okay, well, I don't need 100% liquidity tomorrow. So, for my retirement, how can I invest? How can I get good risk-adjusted returns and maybe take a little bit longer term view of my portfolio? And so you see individuals, depending on their financial wherewithal, say we're going to allocate 5%, 10%, maybe even 20% to alternatives that provide current income and good long-term risk-adjusted returns. So, and RIAs are really critical in advising their individual clients and assessing, okay, yes, alternatives, but, given your current liquidity needs, really more like 5% or, 3%, right? You can't at this point, but you can increase it over time. And others who may have more means saying, you can afford to be more invested in long-term illiquid investments and really, focus on, retirement. So we see RIAs and financial advisors and brokerage firms as all areas that we seek to educate on the benefits of private credit and private equity and alternatives more broadly. And so, a big part of our focus at Churchill is creating, specifically creating vehicles, funds, if you will, that enable individual investors to invest in private credit or private equity.
That's great. Tell me, so where can people go to find out more about you and what you do?
Sure. So we have a website. So Churchill Asset Management, and there's lots of information there on how we invest and where we invest. I'm very active on LinkedIn. So anyone who wants to connect, more than welcome to drop me a connection, and I'm happy to connect. We produce a tremendous amount of industry information on non-commercial commercialized industry information through a thought leadership piece called The Lead Left. My partner Randy Schwimmer has been editing that piece now. It comes out weekly, and it's all about private credit and the private credit markets and what's going on in direct lending. And we consciously have no commercials in the piece. So there's no advertising. We have content partnerships with all of the major firms that provide information in our area, including firms like PitchBook and Credit Flux and others. And we basically pull all that together and deliver it to investors, institutional investors, as well as individuals. And you can see that as well. It's called the Lead Left, and that's its own separate, website where individuals can jump on and read about private credit and direct lending and the financing market. So Churchill on our website, and myself personally, I'm on LinkedIn. Churchill obviously has a post on LinkedIn. I do speak at many industry conferences, and ultimately I regularly appear on Bloomberg and CNBC, and I've been on the Wall Street Journal and Financial Times, and I'm on Bloomberg a lot. So Romain Bostic's one of my favorites, and I get on and chat with Romain about what's going on in private credit. I was just on this past Monday, and I was on CNBC last week on Squawk Box talking about the private credit world. And I really enjoy educating people about our asset class. When you've been there at the beginning and nobody knew anything about it, it's kind of fun to be able to talk about it today and maybe give folks some perspective on where we are. But our website is chock full of information. The Lead Left is a great source, and if you see me speaking at any of the media outlets, I try to be helpful and informative on what we're seeing in the market.
Very, very much the servant leader who shares his knowledge, his information, helps to empower people. And I see that you're on a lot of advisory committees, pension investment advisory committee for the Archdiocese of New York. I love what you've done for Canisius High School, the Milken Institute, Diversity, Equity, and Inclusion in Asset Management Executive Council. You are just kind of the exemplification of the servant leader. I'm sure it takes a lot of time, a lot of energy, and you do it with a smile. And I'm proud to know you. I'm disappointed that I've been pronouncing your name wrong since 1973.
well, and I do a lot of that stuff, but I'll tell you that my passion, my absolute passion, is music, and I've been playing in a rock, pop, funk, R&B band for now, almost 20 years. And we were actually a few years ago voted the best cover band in Connecticut.
Can you share the name? Share the name of the band.
It's called Suburban Chaos. So we play private events and local watering holes and private parties. And I was on the Squawk Box last week, and one of the commentators was in a band too, and he said, "Well, I'll give you 10 seconds to give a short commercial on your band." And I said, "Well, it's pretty simple. We play all the oldies, so we play, 60s, 70s, 80s, 90s. I like to say, I don't think we played much written after 2000, but a lot of the good stuff, so that's a real passion of mine. And my son's a musician too. So, it's been fun to play with him from time to time too. So
that's super stuff. Ken, final question. Given all of your successes and the milestones and the achievements, what's your biggest challenge now? What keeps you up at night?
So, it's interesting, our business has done incredibly well. We had another record year last year, and, financially, life's been very good to me and very rewarding. And I think, it comes back to, what I talked about at the beginning. What keeps me up at night is really making sure that the culture and the connectivity to our people and our organization is maintained at the very highest level. And you worry about that, every once in a while, you get that phone call, and I hate the phone call. I dread it, and I know everybody will, my wife says to me, Ken, not every single person is going to work for you. You're going to have people over time, that leave. Every company has some turnover, but I take it very personally. I can count on one and a half hands the number of people that have actually left our firm in the last 10 years. And so, I really focus on attracting, mentoring, empowering our best people, our people. And it's all about culture, and it's all about, growing and constantly evolving as a firm. And that keeps me up at night, because, you make decisions, and, you think they're the best decisions based on the people, and you solicit a lot of input in those decisions. I mean, a great example is that, we doubled the size of the operating committee of our firm. And I talked to all of our senior people, and they all were unanimous in saying, we've gotten a lot bigger, and our business has gotten a lot more complicated, and it's the right thing to do, because we'll bring more of the key people that drive the business inside the tent, and that will make us more connected and more effective as a firm. But you look back and say, gee, are they ready? I think they're ready. So, I got to make sure they are. So it's all about people, it's all about people. And so what keeps me up at night is just making sure that I'm connected to our people. I'm connected to the culture, and then I'm responsive to, when they have a problem, as I said at the beginning of the podcast, that I can fix stuff, right? That I'm still there to fix stuff, even if it's little stuff. Sometimes that can make a big difference. And sure. When you have a junior person and the CEO, takes the time to fix something, or the time to talk to somebody at their desk for 20 minutes about what's going right and what's going wrong, you like to think that has a real influence. So I'm still very focused on our people and our culture, and being the best servant leader that I can be, and empowering those people to be the best they can be.
Absolutely impressive. And listen, I want to thank you for your time today. To my audience, this is Karl McKinnie, having the pleasure of interviewing my high school alum. I gotta get the English together. My high school alum, Ken Kencel, who is the chairman, president, founder, CEO, the all everything of Churchill Asset Management. I hope you guys have learned a lot and grown a lot. Ken has left where you can find him. Feel free to do so. And Ken, once again, thank you for your time today, and we'll see you guys and talk to you the next time.
Fantastic. Thank you so much, Karl. It was a pleasure to do this with you and to connect, and look forward to seeing you on my next trip to Buffalo. We'll get together and grab a bite and share a beer. And of course, I would be remiss if I didn't say, go Bills.
Go Bills. All right. Thank you, Ken.
Good. Thanks a lot, Karl.
49 faces looked to him in triumph. Over the last 12 months, they had each taken turns and promoted his business for a week at a time, driving over $987,342 in revenue. What if you had a network of 50 centers of influence who promoted your business every week for a year? Grab your copy of the #1 Amazon best-selling book, The Ultimate Guide to Growing Your Business with a Podcast, at 33% off the Amazon price by going to ultimatepodcastbook.com. Again, that website for 33% off the Amazon price is ultimatepodcastbook.com.